is that the bill be now read a second time. I call the member for Wright.
Thank you, Madam Deputy Speaker. And I rise to speak on the Superannuation Laws Amendment, Capital Gains Tax Relief and Other Efficiency Measures Bill 2012 and the Superannuation Auditor Registration Imposition Bill 2012 that's currently before the House. The bill provides capital gains tax relief for the merger of superannuation funds, introducing a new registration regime for auditors and self-managed superannuation funds, expands reporting obligations for superannuation providers, and introduces new information exchanges provisions for superannuation, particularly regarding the use of tax file numbers. The Superannuation Auditor Registration Imposition Bill 2012 establishes the framework for a new registration regime of MSF auditors. Now, Deputy Speaker, I'm sure that many members of this House will be aware that self-managed super funds are the largest sector in the superannuation industry, worth around that $400 billion mark. The members of these funds are advised by a range of experts, including lawyers, financial planners and accountants, and a key role played by the 11,000 or so SMSF auditors. They play a vital role in maintaining the integrity of a major sector of the superannuation system. Deputy Speaker, I can't emphasise enough how important it is to those on this side of the House to make sure that this legislation is spot on the mark, because I'm sure those who will be affected by this legislation in my electorate would be bitterly disappointed. There are numerous self-funded retirees in my electorate of Wright, and these additional changes to their superannuation make it harder for them to manage, costlier for them to manage their self-managed super funds and for their retirement, and hereby reduce their burden on the public purse. This is simply another demonstration that this Labor government has no economic strategy and will always put its own political survival ahead of the national interest. I cannot support imposing more red tape, and this bill is a classic example of this. Madam Deputy Speaker, this is another grab for those people who can least afford it. I mean, as a self-managed super fund, I don't have a self-managed super fund, but there is a number of people in my electorate that do. It disheartens me when they bring their statements in to my office, and the value of those funds are rapidly deteriorating over a period of time. I bring the government's attention, I bring the House's attention to early in 2007. The Labor government had broken its 2007 promise of one in, one out of legislation, where every new regulation would be matched by repealing another piece of legislation or regulation. The latest figures show that it's introduced 18,089 new regulations, and how many do you reckon that we've repealed? 86. 86, so 18,000 in, 86 out. An average of 11 new regulations have been added just about every single day since this government has come to power. Deputy Speaker, the first part of this bill looks at the issues of capital gains tax and how it affects those who choose to merge their funds from one to another. Now, let me be clear that the state, for the record, that no problem has been identified that will be solved by these new requirements. It will be merely making it more costly for those Australians who wish to manage their own super fund to do so. Madam Speaker, it's well known that the Coalition supports Australians who want to look after their own retirement. However, this Labor government just looks on superannuation, particularly those who manage their own super fund, as a source of revenue. And there is a constant battle to fiddle the books, to get their hands into the pockets of mums and dads, to get their hands into the pockets of businesses so they can hang on to a political credibility, some type of political credibility of a wafer-thin surplus. As many in this House will know, capital gains tax can be a barrier to the merging of superannuation funds. This is because whenever superannuation funds merge, this will typically trigger a capital gains tax event, which leads to neither capital gains and/or a loss being applied to those assets being transferred. When a merger takes place and the assets have been transferred, the merger fund is typically wound up. However, when the merger fund comes to an end, and any previous capital or revenue loss that exists at that time will be forgone. The Coalition supports that particular measure. Due to the prevailing economic and fiscal and financial market conditions in late 2008, a temporary taxation relief measure was passed in the form of a loss relief and an asset rollover to assist the superannuation industry and through the industry-relevant funds. However, the relief provided that its legislation was limited to the 1st of October 2011. Now, Deputy Speaker, those on this side of the House supported the tax relief for merger super funds at the time as a sensible measure to ensure otherwise sensible mergers of superannuation funds was not prevented based on taxation considerations. That is because the Coalition supports Australians who want to look after their own retirement. And we will always support those Australians who want to look after their own retirement and who are prepared to do so. This bill is again temporary. This current bill is again temporary. This time for mergers. This time for the mergers that occur on and after the 1st of October 2011 and before the 2nd of July 2017. And it has been made clear that the Coalition supports capital gains relief for merging superannuation funds. The next part of the bill, Madam Speaker, introduces new registration regimes for auditors and self-managed superannuation funds. The recent Super System review recommended that the Australian Securities and Investment Commission be appointed as the registration body for self-managed super funds approved auditors. The review found that all approved auditors are subject to the same minimum competency standards, nor are they subject to the same enforcement actions. As some background information, the practical experience regulation will require at least 300 hours of working in auditing the self-managed super funds in 3 years immediately before applying for registration with the Australian Securities and Investment Commission. An approved self-managed superannuation fund auditor will also need to undertake at least 120 hours of continued professional development training every 3 years. This training must include 30 hours of training about superannuation, of which 8 hours of training is SMSF auditing. Now, there are many other facts that I could add here, but it feels that it's important to voice that these issues are current within the bill. Since 2008, Labor has added 18,089 regulations to the books, and back in 2007, the Labor government had promised that it would make no changes to the superannuations law, and I quote, "Not one dot, not one tittle." That was the quote back in 2007, that there'd be no changes. However, the promises that have been broken to date with reference to superannuation total 9 so far, generating a total of $7.8 billion in additional revenue. So here we have continually a government saying one thing and doing another. The Achilles heel of this government will always be the Prime Minister 4 days before the election standing and saying that there would be no carbon tax under a government I lead. And of course, there was the Treasurer's comments that it is hysterical that somehow we're moving towards a carbon tax. This is just another piece of legislation where the government have said one thing and done another. These changes are undermining the Australian people's confidence in the superannuation system, lowering their level of contributions and consequently the level of savings available in their retirement. Voluntary superannuation contributions are down significantly in the context of a more challenging market environment. It must be disheartening for superannuation statements when they arrive at the House to see on those self-managed super funds that the value of those assets, through no fault of their own, through world market pressures, are continually declining, and it would be an enormous burden on families, retirees, as they sit there and work out how are they going to survive in retirement, and to have this additional burden of knowing that there are now additional costs that this government intend to apply to their savings. Madam Deputy Speaker, the last thing we need is more Labor taxes on voluntary savings, making a bad situation even worse. This bill also aims to expand the existing reporting obligations for superannuation providers. And yet again, we have a government doing everything it can to try and prevent the inevitable failure. A superannuation provider is currently only required to report about individual accounts if they have received contributions throughout the year, and either the superannuation interest is held at the end of the period or the member received a benefit during the period. Effectively, no statement is required for inactive superannuation accounts. However, under the revised reporting obligation, funds will be required to provide statements for all members, both active and inactive. This is to support the implementation of a stronger super package, in particular the measures designed to facilitate consolidation of superannuation funds and their accounts. Thankfully, I can report back to my constituents of Wright that the Coalition Deregulation Task Force will continue to consult business and the community organisations around the country looking to cut red tape. The Coalition has a clear roadmap for real deregulation by cutting $1 billion worth of red tape out of the system. That's headed up by our Senator Arthur Sinodinos. He has been tasked for chopping out $1 billion worth of red tape, and I suggest that that task won't be too hard. Madam Speaker, the last part of this bill amends the Superannuation Industry Supervision Act of 1993 and the Retirement Savings Account Act of 1997 to improve linking a tax file number to superannuation accounts, thereby government claims making them less likely to become inactive. The changes and other examples of red tape is so that very typical of this Labor government. It is also well known to those on this side of the House that Labor has a terrible track record when it comes to decreasing red tape that does nothing to help Australian people achieve a self-funded retirement. In conclusion, Madam Deputy Speaker, it's obvious that those on this side of the House that every time Labor increases taxes on Australian super savers, they reduce the incentive for them to do the right thing by saving and achieving for a self-funded retirement. Labor have an addiction to wasteful spending, and instead of standing up for Australians doing the right thing by saving for their retirement, this government is hard at work making sure that their money goes down the drain. This is a government who doesn't know how to manage money and how to live within its means, which is why they have to make adjustments to their fiscal policies. What we need is a government who will encourage to support mums and dads, students and young workers, working-class Australians to save so that they can enjoy a comfortable retirement. Importantly, we need a government that spends less and lives within its means, which therefore can tax less, and which is focused on growing our productivity and economy more strongly. Stronger growth would not only increase in prosperity, it would also improve superannuation returns and would lead to increased government revenue without the need for all of these new increased Labor Party taxes. We will be placing an amendment to Schedule 2 of this bill, and I commend that to the House.
The question is